Boom, we are live, Bear Family. A little late for you guys. I'm going to keep it short today, so we're just going to go over the general markets. And I've got a question I want to ask all of you at the end of this episode as well. So if you're a longtime Bear Family member, stick around for that one. First off, though, I want to take a look at the Look into Bitcoin's Fear versus Greed Index. Here we can see since November, October 2023, and just this last month, we were down at around a score of 29, which is fairly deep into the fear state, and now we've jumped up into greed at around 65. Now, there's already been some big bias shifts between here and there. I think one of the important parts to remember is that most markets are driven by, or I guess rather all markets are driven by human emotion. Some people like to call it manipulation, but it's really just buying and selling based off the ability of that person to do so. You could get into the conversation around how printing more US dollars is the manipulation of currency, and therefore if you have infinite currency to spend, you can manipulate markets, which in certain markets is very true. The ETFs itself may actually be looked upon as one of those things that have deteriorated some of what Bitcoin was originally set out to be, but it's a whole other philosophical conversation. More importantly, this shift from fear back into greed so quickly is a noticeable one. I was on X today following some conversations around other people whose posts on July 8th says, I'm so bearish, I'm getting out of crypto, I don't want to be here anymore, to everything's good, we're back in the game now. And this type of sentiment itself is noticeable on the street for a reason. It's because that's what drives the market. This buying and selling is largely made up of many different investors going through a very similar experience, which is one of the reasons why buy when there's blood in the streets has been such a common denominator for knowing when you want to be in the markets and when. It's because everybody is going through a very similar emotion. If you go back to my videos in early of January 2020, I was quite concerned that the markets were going to drop out. And by the time March 11th came around, I was already short in my positions for Bitcoin and then switched long as soon as everything had dropped, basically at around 6,500. So missed some of the bottom there, but nonetheless, the point of this is that emotion is what we're charting here with the fear into greed index. And one of the reasons why this is so important is because often people get caught up into thinking too much and they shift sentiments very quickly. Now, personally, again, my sentiment hasn't shifted to bearish yet, and that's because, and again, this distribution, going into full-scale distribution is usually a requisite of the amount of time that you've spent in the market to begin with. As we zoomed out and followed the path to get here for Bitcoin, we can also see the previous path that took us to the last all-time highs. Now, I can make some very valid arguments that just there's not enough retail around at all anymore. They may have all started to die suddenly and randomly. Therefore, the markets just aren't going to go up. And the other important thing to remember, too, is that in 2021, the money printer in the United States pumped out more money than we have basically ever seen. So we saw a massive move in everything. Everything was up hundreds of percent at the very least. And this is typical of what would happen if you print dollars. You're going to inflate the currency, therefore you're going to inflate the prices of all assets, and the demand for those assets is going to increase because more people have liquid capital to spend on said asset. So where do we turn into bias, shift into bearish bias and stay there? Again, so nothing in my bias has shifted, still bullish. Although, again, taking profits and being more defensive, especially in the altcoin sector, made a ton of sense. Most of those actually turned into distribution, but it's not unlike anything we had seen in the past, where the asset prices had dropped 60 to 70% inside of the bull run before continuing up another 3 to 10x, depending on which asset you were in. For me personally, the 200-day moving average represents a very stable place of understanding for kind of the support of the bull market. As you can see back here in March of 2023, once we kind of retested both the 200 and the 314-day moving average, tested it again here at around 27,000, the bull market went on to continue. Here, we've been testing that market average around the $58,000 mark. And what I think we're going to see here based off some of our oscillators and oscillating movements is a retest of that. So if I scroll down into the 6 hour here, you can see the stochastic RSI, which represents, if you don't know what stochastic means, it tries to remove some of the randomness and just shows you the highs and lows of the peaks of the buying, whereas the RSI is a bit more just the overbought and oversold territory without removing the randomness. So that means that this oscillator here actually gives us a pretty good picture on the time frame that regardless of where the RSI is, whether it's at the bottom or the top, we know that we are oversold and turning down. This is where I suspect that we're going to see a test. Now, on the 6 hour, number one, we jumped up to the 200 and 314 simple moving averages on the 6 hour and couldn't get it back above there. We've seen resistance. And now the previous area of support that we need are probably going to come down to retest is somewhere between 61,000 and 59,000. Again, that 200-day simple moving average. But again, it's important to note that our stochastic RSI is oversold and turning down. Our RSI is in the oversold territory. The MACD has crossed over the zero line already and is turning down, and hash ribbons have not turned green for Bitcoin yet. So what does that mean? I think we're going to get a retest. I think we're going to get a test. If this turns into the test that we think it could be, which would verify that this is a reaccumulation range. Again, I made a mistake here. I thought this was the test, testing the bottom of the EMA bands here. Sometimes, again, it's just easy to get these things wrong. Trading isn't perfect. You're going to make mistakes in that learning process, trying to understand how your own emotion is also playing into this, which is one of the reasons why I said, we're up so high, especially with so many assets. It's just good to be defensive with profits because we're up like almost 12x on Fetch, 10x on Solana, 5x, 6x on Avalanche. Many assets in the multiple X returns since October. Being defensive just made sense. We were in the greed territory. I remember telling people, hey, be defensive with your profits. And everyone was like, the bull market's barely even started. Like, you're going to miss out on the best part. And they were wrong. Now, I was also wrong here. Moving into this second bout, I thought for some reason, hey, look, we broke the downward trend line. We're going to bump up. It's this nice test and breakout. No, that's exactly the most difficult thing about the Wyckoff trading ranges is scale and variance. Yes, I've gone over this topic so many times, and it's such a beautiful mathematical principle to think about. And it is also hard to reconcile when you're going through your process. Could this be the spring, or could it be a point of weakness? We're not going to know until this 6 hour chart for Bitcoin really comes in and tests this area for us. So expect a retest of $60,000 now. I expect people's bias to shift. But for me, the overall trend hasn't changed because of, again, how long it took to get here until I see real closes and confirmations below the 200-day moving averages, which could mean a big drop. Right? I mean, we could drop all the way down to 49,000, try to get back up to 58,000, not close above, and then I would be like, okay, trend has shifted, like get out of all of the market positions, basically. But there's a confidence level here that could be built based off this turning into that trend shift within this trading range at the very least. So back test 60,000. If we can't hold the EMA bands here, we're going to go lower, as low as maybe 35,000. But again, that's not the trend. The trend was bullish to get here. The trend should remain bullish until we start to really break down characteristics. And with massive inflows coming into the ETFs, again, this is just another vision of the fear up from 20 all the way back up to 65, moving into the greed territory as well. Again, remembering that we have a massive amount, $20 to $30 billion in short liquidations that could come through if we hit that $72,000 mark. So that would be great. The big players love to remove leverage positions, whether they're short or long, although the massive $30,000 leverage positions are going to be much harder. It's significantly further to go down and many more liquidations to go within that process. Whereas there's a massive amount right at 72,000. All it would have to do is wick up there once and turn around instantly back to 72 grand. And that's also often what we'll see is trading ranges can be very deceiving. They could do something like this, come up here, look like they're going to break out, turn into a distribution, and then you realize, oh shit, we're going all the way down. This is what a distribution schematic often looks like, and this would be considered a point of weakness. Here, this could also be considered a spring. Now, there are some volume indicators that say that might be the case, and again, remember, we are all in bullish shift. We are in a bullish shift basically since October. You've got bullish movement in the S&P 500 still with resistance around 757.2. The NASDAQ Composite Index is even a little higher, although we could, if we draw this just previous area, we're actually getting pretty damn close to the top of the resistance channel for the NASDAQ here. I was following some charts because largely much of what's going on in the S&P 500 is also driven by NVIDIA. We don't know what that has as an effect in the market, but it's some enormous amount of GDP, which doesn't make a whole lot of sense necessarily either. So there's definitely room for downside in all of these assets. But most of the time when governments get into this situation, they do the exact same thing. They turn around, they cut rates, they start printing money. It's usually what happens. Sometimes they act differently, but we have yet to see that. So unless we see, if we see a breakdown here, again, of the EMA bands at around 60,000, we're probably going lower. But right now we're at a really critical point because it's likely that this could turn into a test. So we're going to know within the next few days, effectively. And again, I thought that test was here. I really did. I can't express that, when we make mistakes, we try to do our best and learn from them, especially because I was like so prompt on taking defensive profits here, jumping back in fully bull, thinking this was the spring, was a little bit ostentatious. Yeah, I think that's the correct use of that word. It's been a while since I've used the word ostentatious, but I believe it was a little ostentatious of me to jump in with such high level of confidence here, with such high levels of volatility within this trading range taking place. But just as an example, again, it's important to note that, for instance, Fetch has already gone through a reaccumulation, distribution, redistribution, and could be forming what turns into a new reaccumulation channel at the bottom of this channel, the bottom of the box here. We've now hit the 200 simple moving averages, and there's likely room to move to the top of the trading range. Very similar, I mentioned this about Solana as well. If we look at Solana, again, it's important to remember that we are above the point of control, which is nice, but we could easily come down to backtest $143, and the simple moving averages at around 148. All of our oscillators are in the oversold territory on the lower 6-hour time frame, and getting into that oversold territory on the higher daily time frame. That's not to say that this is done though, again, because if you look down at the bottom of the chart here, our RSI, which I will open up to the maxed out here, has not maxed out. It's actually been in this nice falling channel to some degree for the RSI, but nonetheless, we're not in totally oversold territory, overbought territory for Solana at this moment yet either. So both the RSI and the MACD just crossed over the zero line on the daily too. So it seems like the test here is going to be the really important one. For Solana, come down here, it'd be really nice to test both the EMA bands, the simple moving averages, and the point of control, all between 139 and 148 effectively. So I think that's what we're about to witness. Across the board, we see something very similar. Again, we moved down from the bottom of the range to damn near the top of the range for Avalanche here. Again, noting that we've already been through distribution and redistribution, right? So this is important to note, is generally you see these things move in somewhat similar patterns. Accumulation, reaccumulation, sometimes a smaller reaccumulation, and then distribution, redistribution, and then into accumulation again. So the fact that we've seen one distribution, redistribution, and are moving into what appears to be a pretty tight range here could actually spell reaccumulation before the final asset markup within these things. Gold breaking into new all-time highs today. Again, I think this is one of the leading indicators too now. It's just we've been in such a long-term reaccumulation channel for gold, and its bids against the future failings of the dollar. So we had a multi-year from 2020 to 2024 SOS phase, and on the weekly here, you can see we're in an even larger, what's likely cup and handle between 2011 and 2023. So slower moving, but again, seeing this peak out on the smaller time frames, again, just leads to bullish indications. I don't see them doing anything different other than just printing dollars into the future. And I also think they're going to be able to print a lot more of them because there's less people. So anyways, just a quick little update. No bias trend has shifted yet, but if we start to close below the 200-day moving average consistently after an LPSY drop, then game's over. But we haven't seen that yet, so best bet is probably to assume that this is accumulation of some kind. I wouldn't be playing with leverage here. There's just still way too much volatility in the ecosystem until we see the really tight reaccumulation bands and SOS bands that we like so much. Anyways, just a quick little update for today. Tea with the Arcane Bear. Oh yeah, I want to ask you guys all one question. Bear family, all of you that have been supporting me for so long, first off, thank you. I really appreciate it. It means a lot to me. Second, I've got a question. I would love to hear your guys' advice and input on what I could do better or maybe different. Again, it hurts a little bit on the inside to see that every time I post a video, I'm losing like 10 subscribers. You guys want to like maybe give me a hint on what I'm doing wrong or what I could do to like not, so you don't just leave? I know the ones who are like really going to stick around are going to stick around, but I'm into data and numbers. I'm like, oh, cool. Like what's happening with my YouTube channel? I'm like, whoa, we lost 120 subscribers in the last 30 days. Like how? What did I do? Maybe I'm not hypey enough. There could be a bunch of things, but I don't really care about that. More importantly, what I do care about is what you guys think I could do best to provide more value. And if there are some of you who are thinking of unsubscribing, please tell me what the fuck that is. Maybe it's just YouTube. It could actually be YouTube. Maybe if you've been unsubscribed by accident by YouTube and I feel bad for no particular reason and it's really just YouTube and the machine trying to fucking eat me alive here. Anyways, I wanted to ask your guys' advice on that one. I don't normally do it, but you guys are all brilliant people in the Bear family. And if you stuck around this long, I deeply appreciate it. So would love to hear feedback. If you want, probably one of the best ways to do it would be to go to X, follow me there. I've just made a post there asking, hey, Bear family, I would love to have your advice. Stoked to hear insights and feedback. Drop me a comment there if you want to leave it in the YouTube chat channel as well. That's also appreciated. Anyway, so this is Tea with the Arcane Bear signing off for this today.